The McAlvany Weekly Commentary, covering monetary, economic, and geopolitical news events.
I mean, if you go look at historically what happens to politicians when the market goes down big, the incumbents lose. So they know they've got a problem because the 2022 is coming up here. That's why he's better start talking taper and start doing it now. The Democrats will go out of their minds if he starts trying to do this in the summer. And by then, if inflation is out of control, they're going to be mad at him anyway. And he's going to take the hit anyway. So I think the best thing right now would be is if Powell figured out that Biden's not likely to renominate him, he does what's right, not what's politically correct.
Now here are Kevin Orrick and David McAlvany.
Welcome to the McAlvany Weekly Commentary. I'm Kevin Orrick along with David McAlvany. Well, about once a year, sometimes more than that, we try to talk to our friend Bill King. And you and I were talking, we have access to an awful lot of information. Dave, you're reading all the time. You're reading a lot of stuff that I don't read, and that's why this program has been so helpful. But King is different. If I could only read one thing a day, to be honest with you, Bill King wraps things up just about the way I need them to be wrapped up. And so I'm looking forward to today's conversation with him.
Our experience defines us. And I think if you look at Bill King's professional career, you can appreciate not only the sort of encyclopedic grasp of what the last 30, 40 years of financial market activity has been, because he's been there day in and day out, but also the games that get played. And as a trader, he's pragmatic enough to see that it's not just the numbers that matter. It's social trends, it's policy choices, it's the interaction of geopolitics and market pricing. Nothing is off limits when it comes to what can drive a price higher or lower.
Well, and you love practitioners. You love practitioners because these are guys who get slapped when they do something wrong and they get rewarded when they do something right. You know, one of his favorite phrases is, how's that working out for you? But I think he's always asking himself that question all the time. And he's got an amazing memory, so he can, bring that to his decision making and his recommendations.
Yeah, it's an interesting world because I love theory and I love philosophy, but there's elegance when a theory is tested in real time.
Right.
There's a certain reality check when your P&L tells you if you're right or wrong, regardless of how well you sketched things out.
Right.
And if you don't make a mid-course correction and manage risk, you may be doomed.
Sometimes you have to swallow your pride to do that too, don't you?
It's a healthy practice. And anybody who doesn't practice it finds themselves no longer in the business. What's on your mind? What are the key things that you think we got to cover, not just this week in snapshot, but, the trends in play?
Well, this is going to be in my letter on money. This is what I was writing about today's action, because this is one of those strange days where everything went down. And when I say that, it also means Forex, because the dollar goes up. And you got to ask, well, normally what does that do? And usually, if it's an economic concern, bonds usually go up. But today, industrial commodities, you saw gold was down a little bit, all this stuff was going down in here. So part of this is probably China with this Evergrande that people are concerned it could be their Lehman moment. It could be the economic problems here. It could be United States leadership. It could be the debt ceiling theatrics that are going on. And then there's, of course, you got the Fed FOMC meeting this week, which is today. If you say what was going on, it could be the Fed taper thing here. And at first, the people will sell bonds, but then they'll buy them. We've seen that if you look over time. You go, the Fed's out of the market, they're not going to be monetizing bonds, so then you're going to sell them off. And God knows how long that sell-off goes. And then once the economy starts having trouble, then you'll see them move back to bonds. Same thing with gold. Gold's going to go down if the Fed starts tapering. You've already seen that, after it's going up in here. But then at some point, you get economic concerns. You see, so there's so many different cross currents coming in right now. And then the other thing now is this unbelievable manipulation that's going on in the markets. It's absolutely just worse than ever. And part of it is because you got all this retail order flow in there. And the wise guys know it, and they run in front. Before they used to run in front of institutions. It was much harder because institutions, they trade by VWAP, they trade by computers, they're measured, they're careful. I mean, you see the same stuff every day. Bad news in Asia, you get whacked, and then they all buy them sometime in the first hour, and then they jam them up, and they go down. Then you get the European closed stuff, and then they fool around, and you get the noon balloon, and then whatever, and then at the end of the day, they're trying to mark them up. These aren't capital markets anymore, as I put in the letter. This is a casino now, and this is blatant manipulation. This is trader games. This is And I'm an old option trader back from 79, 80, 81 when I was on the SIBO. But what's going on in the option market now is unfathomable. You have so many retail people in here buying these options. Today there's trillions of dollars of notional value going out. I have this in the letter here, but I think it was last Friday, a week ago. I mean, I always talk about the Friday before expiration. You tend to have that rally in the afternoon because guys start loading up for the expiration week squeeze. I try to say that. I might forget saying it, but that goes on for years. That's been going on. So last Friday, ahead of this week's expiration, listed options traded $2 trillion notional volume. That's enormous.
Yeah.
It's absolutely enormous. And 71% of the volume, I think, was like expired, this week or it was expiring next week at the end of the month option type things. Man, that's incredible. The reason they got rid of option trading is because of the way it contributed to the 29 crash. And that was nothing. There was just these little put-call shops. They were bucket shops. They were scamming people, whatever. But there's not much difference now. You buy options, they manipulate them up, manipulate them down, the big guys, squeeze them. You saw that Wednesday, the huge rally squeeze up, and then Thursday we get whacked on bad news in the afternoon. Yesterday afternoon, they were running stuff almost vertical. It was all manipulation. You saw, in the I think it was 5 strike prices, you had almost 1 million options traded in the SPY calls, September calls. That's ridiculous.
That's amazing.
But then at the same time, that's why you had a top in the market and it went down because all those people were mostly long. And if someone's going to short them, they're typically buying something against it. Not too many retail people are short sellers. Even your traders are usually not. They usually sell the premium and buy something against it. They could buy an S&P future against it. They could be a basket of stocks. They could do. They could actually probably buy the easiest thing is buy the SPY cash. You just go in there and you buy it on the New York Stock Exchange and you sell the options against it. I mean, that's what options. Option guys, by and large, are insurance companies. They're selling insurance, and then they hedge their risk, and that's how the insurance companies make money over time. The only time is when you have something catastrophic comes in. Then you got to be careful. If you're not hedged, whatever, then you get hit as an op. But the real pros sell option premium, especially now because it's just so enormous, and then they hedge against it with the underlying vehicle for the most part, and that's creating unbelievable dynamics in the market. I mean, even the financial media picked it up a week or two ago, how you're getting these early in the week rallies in option week, the Friday before, whatever, and then all of a sudden near the end of the week, everybody's trying to get out, which was today. You couldn't get any rallies going. They tried a couple times. You just couldn't get it going because there's too many guys, too many retail people long these options. Now, if you have a few big whales and they're acting in concert, they'll squeeze people, whatever. But when you have hundreds of thousands of traders all with their own self-interest, you can't control it. So they start moving for the exits. You can't call your buddy up and go, hey, don't go selling us. Let's try to squeeze it higher, which is what Wall Street does. You call your buddies, whatever, you try to, whatever. You can't do that when you got all these retail traders and there's no way to control them. They think this is nice and fun, but history is very, very clear. When you have the panic to get out, it always goes down faster and more violent and more steep than when you go up. And that's irrefutable history.
Yeah, it seems like, the duration of this move in equities has been one for the record books. And, the kind of volumes that we're seeing, the kind of activity that we're seeing is pretty typical of what you might call late cycle stuff. It's as if people have forgotten what a risk looks like, what the downside looks like, how to find the exit if they need to. On the other hand, valuations, maybe you can speak to valuations. They're high. Who says they can't go a lot higher? I mean, insanity is not, a dot on a line. It's a whole range. Insanity began some time ago and could continue forward. What about duration and valuations?
Well, there isn't any. Everything's overvalued because the money's been so cheap for so long. This isn't just the last few years cheap. We're talking how many decades of cheap money.
Yeah.
I mean, that's the problem here. Everything's over. Real estate, the only thing you can make an argument for is gold isn't overvalued because you can value it versus your traditional versus Dow Jones Industrial Average versus the S&P. The other thing is if you buy the argument gold is money, then you value it versus money supply, value it against cash and in circulation. And you can value it against credit. You can value it against debt because people don't understand debt is money in the United States system. That's what the Fed is. The debt becomes money. That's what makes the street go around is collateralizing debt, and the Fed buys it and puts money in the system. I mean, what did they do today? Did you hear how absurd it is? I think the Fed today's reverse repo is $1.28 trillion. That means there's $1.28 trillion out there, and I think it was 79 counterparties in money markets and on the street and hedge funds that they can't do anything with. They don't know what to do with it. So they're throwing it back at the Fed to get a few basis points. That's the minimum amount of excess reserves in the system. That's the minimum. That's absurd. That's absurd. And nobody wants to call the Fed on it because they're sacred, because for decades, they've been doing the heavy lifting to bail out the politicians. So the politicians, the administrations, and the Congress doesn't have to make tough decisions. Just let the Fed paper over it. But I think these guys all got too clever here with the COVID shutdowns. And I think that's what's looming out there, that they don't quite understand what they did here. The thing I've been trying to tell people is if you go back and you look, and you can even go back to 1982 here when everything was really going to hell in a handbasket because Volcker was raising rates. It wasn't cutting reserves. I mean, he was slowing reserves. You go back and look because, he took reserves out of the system. No, he didn't. He just slowed the reserves. He said, no, what? I'm just slowing this down. And, interest rates, we're not targeting interest rates. They're going to go where they're going to go because that's how we're going to kill the inflation. So when everything got really ugly in 82, and Brazil and Mexico called up and said, we're going to default, they pumped the money. And if you go back up to that, when the Hunts almost took down the system in March of 1980 with the silver, they pumped the money. Volcker pumped the money in there for probably until about June, if I'm not mistaken, in there. And that's what unleashed, the rest of the year. Oil went to a new high by, I think, peaked in November, and the stocks went berserk up there. But they weren't paying attention because he started taking the money out in the fall again, and that's why, in 81 it was really ugly. But that was, we'll pump money. And then 84, the Continental Bank went down, we bail them out. You had, Maryland and Ohio savings and loans collapsed. Bevel Bressler Municipal House almost took Chase down. And everything, we'll pump money. So then you can fast forward, and you go to 87 crash. What do? You pump money like crazy. You go to 89 when the Japanese quit lending and the United and all those were buying all the air stocks. They had the mini crash there. What did we do? Pump money. 91, 92 when the Texas banks had gone down, and the New York money centers, names you don't hear anymore, Bankers Trust, Manny Hanny, Chemical Bank, was Chase, et cetera. They were absorbing all the banks. Well, they were still all of a sudden, all that bad assets they had were starting to take them down. So 91 there, when we had that recession and, what they do to get out, to save Citibank and Chase and actually it was Bank of New England, right? And pump money. You go to Mexico, what we do, pump money. Just could go all the way, keep going all the way up. The long-term capital market, LTCM, went down, pump money. Russia's going to bail out, pump money. And people forget that's why you had the bubble in 90. This stuff always hitting the fan in 97 and 98. 97 was, of course, the Asian Tigers, or the Asian contagion, pump money. Now, we get up in, we go here 9/11, pump money in the system, just load it up. Then you had they still were worried about depression, bring in Ben Bernanke, we'll run the housing bubble, we'll pump money. 2008, pump money. Now, the problem they had is they think, well, whether it was to get Donald Trump or not, we're going to run to COVID. This was not an accident. There was a purpose for shutting down. You did not have to shut down the way they shut down. Sweden didn't do it. They did fine. That's a different argument, I guess. But you didn't have to do this. But the problem is, after all these years, after almost 40 years of every time we had a crisis, we were just going to pump enormous amount of money, stock markets, assets will inflate, and we're going to go to the moon. The problem these idiots didn't think through. Every one of those, and the reason why I understood this was in 1987, when everybody was worried about depression. I was talking to Al Sindlinger, who had been around in the depression, was one of the foremost pollster. He's the guy who put me onto the birth-death model and all these games that the government was doing with CPI and whatever. Very insightful guy. He had data going back to the mid-30s when he was starting business. He was put in business by Herbert Hoover and Henry Luce. That household liquidity was strong. Household income was strong. Now, people look at income, but they don't look at household liquidity. If you lose your job and you have money in the bank, you're not as bad off. And he said, this is a Wall Street accident. That's always, and we're not going to have a depression. It was a great call. And that's what dawned on me. All these other crises we've had, up to the COVID shutdown, was Wall Street problems. Over speculation of some kind, over leveraging debt, or just guys got over leveraged, and you threw money at it. What these idiots did was, we're going to scuttle the economy, whether it was so we could do mail-in votes or give it a try, whatever, or we can take control, we can make you wear, whatever it was, whatever the reason, there was no reason to scuttle this stuff. But the bet was, we'll just turn around and throw money at it. But the problem was, it wasn't a financial problem. They killed the economy. Everything else up to this was not an economic problem. It was a financial problem. And what they didn't think is we put people out of business, they're not coming back. Some may reopen. I'm sure you see here, restaurants were here forever. Nope, we're not coming, we're gone. Businesses, we're gone. Some of it has to do with the age, baby boomers. Others are like, I'm not putting up with the aggravation. I can't make it go. I can't hire people. And the other side is you start throwing money at people not to work. So now we got over 10 million job openings, and people are just not working. Right now, we're watching restaurants, they're closing up. You call, you go in, you complain, this is supposed to be ready. We're an hour late on delivery, and you're getting, hey, I came in as an emergency. I'm not even supposed to be here. You see this. You see the supply surge. People, this is what they did. That's why the inflation and all stuff's going berserk. That's where these guys screwed up, and they screwed themselves. They killed the economy, and they changed behavior of people, and they put people out of business. You know how it is to build a business. Again, this isn't some hedge fund. Oh, we're insolvent. They'll throw money at us. Okay, we're fine. We had a down quarter or two. Goldman Sachs were, we lost 20-30%, but you know what? All of a sudden we'll go to they'll throw so much money at us, we'll just lever up and we'll make so much more money than we ever did in the past. You don't do that with a real economy. You put them out of business. You put hairdressers out. You put shoe people. Put small manufacturing, tool and die. Put them out of business. They're not coming back. A lot of them aren't coming back. You just don't throw money at them. That's what's lurking out here, and we'll see how it plays out here. That's why they want to throw $3.5 trillion in the market here, in this the goodie bag. And besides the debt issue, which is another total issue in here, that's the problem they've had here. They kill the economy, and you want to throw stuff in here, you're going to keep getting inflation. You've destroyed your supply chains, you've destroyed businesses, you've destroyed production, and you've also created disincentives to work. That's what Bill Clinton, everybody loved him because he said, no, we're not doing anything to welfare. We're breaking down on crime and blah, 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 blah. Now you want this was great. That was great. Bill Clinton was great. He did all this. Now you're going the other way. And the reckoning, this isn't financial where you can pop right up, pop right down. It grinds. And the economy is grinding, and you can read it, and you read in all these different surveys. You read it in sentiment. You read it in the PMIs, the responses from the business people. They can't get people to work. My gosh, somebody sent me an article from a paper up in Minnesota, a guy who lives up in upper Wisconsin, almost near Lake Superior, and I can't remember the firm, but they were advertising, I hit us in a letter a few weeks ago, $50,000 bonus to plumbers to come and work with them. I see it now when I try to get people out. I'm trying to get my chimney passed. It's going on 3 months. Can't put a couple holes in the chimney, birds picked in it. Trying to change windows. We booked in June, and they're hoping to get here in October or November. That guy looking at our grass yesterday, he's telling us they can't get fences. People want to put pools up. You have to put the fence. Just can't get the crews out. It's incredible. Everybody you talk can't get them. We talked to people in May about just doing some, it's a landscaper does some businesses or whatever. Just showed up yesterday. And it's his friend of my wife's. Just out booked. We can't get to anything until the fall. I have a tree, a big willow, looks like it's getting ready to fall over. I can't get to it till sometime in the fall. That's how booked they are. So what do? You raise your prices. And people just start paying up to get the service. That's the real economy. This isn't hedge funds. This isn't Goldman Sachs and J.P. Morgan's prop desk. It's the real economy out there. And they've got problems in it. And it's going to play in the 2022 election. That's the other thing going on here. And elections are always important, but this one, they're scared to death. Because typically when a new administration comes in, changes power, the party changes, the White House changes party, they get killed in the midterms. And they do. And I think they only have a Democrat have a 7-seat majority. Typically you're going to lose somewhere between 20 and 40. And now they're bracing for 30 to 50 because Biden's approval ratings are in the toilet. And you have to ask yourself, president ratings can go up or down. What's Biden? Everybody knows he's been around 40 years. This isn't, we don't like the first impressions. What's he going to do?
Right.
What's he going to do foreign policy? Going to start a war? Is he going to go invade Iraq again? What's he going to do to boost his approval rating? He had a approval rating because it was, thank God Trump's not in here. Now they're going, oh my God, look what we did here. And that's a problem. And then what that problem feeds is, Republicans take over? What do you think they're going to do? All these investigations, the January 6th investigation, you're going to have a real one. And it's going to be, what role did Pelosi play in January 6th? What role did the FBI play by putting informants in there to stir up people? What did Hunter Biden do? What did Joe Biden do? Why is Joe Biden giving all this stuff to China? Why is Milley giving stuff to China, General Milley? Why are they'd be saying, China's not our problem. And then all the money that China gave to Hunter Biden. You don't think the Republicans? That's why this thing's going to get nasty next year. These insiders are fighting for their lives because the Republicans stay. And it's before you think, well, when you had the rhinos in there like Paul Ryan and even McCarthy in there now. The problem is, and people say, McCarthy. Well, McCarthy used to be the go along to get along Republican. But you can see he reluctantly is changing his tune because it's going to be the same thing to happen Pelosi. In last election cycle, actually the one before that, in 2018 when Trump lost, they ran, the moderate Democrats were running, we don't like Pelosi. She had a horrible approval rating nationally. We're not going to vote for Pelosi. We're not going to vote for Pelosi. She's out. They actually were running on that because nobody wanted her near Speaker of the House. So what happens? They come in, Pelosi cuts a deal with all those leftists. Got a block. She stayed in there. And the reason she stayed there because she controls all the money coming out of Silicon Valley. She controls that West Coast money. But that was the bargain. Now, McCarthy's going to have the other problem. You see the people here, the 10 people or so that voted to impeach Trump, how many have retired? You're seeing others, Lynn Cheney, these guys, they're getting primaried. You're seeing a number of retirements already in here. The new people coming in, especially the women. The women coming in, the Republican women coming in, have much more fortitude, to say something polite, than the men have. You see, the Green, you see Boebert, you see some of these others, even Stefancic. And there's something like 150 women going to run this time in the GOP, this cycle. And they're coming in, and they know you have to clean out this swamp. That's Trump's biggest mistake. He never cleaned out the swamp. He embraced it. He hired the swamp, and they got him. And anybody with a half a brain in politics knows we got to do something about generals that rip up the Constitution, work against the president, undermine the president, or Department of Justice or FBI that doesn't protect teenage girls that are being abused, but they're busy trying to frame Americans for some crime or some kidnapping plot. I mean, this is going to be gruesome, and they know it. And especially if the Republicans take that, and they should probably take the Senate thing because you're at 50-50, what do you think they're going to do to Biden for the next 2 years? What kind of agenda do you think is going to get passed? Because Biden already went far left because that's where the people that handle him are. They're far left. That's why anybody that pays attention, Biden has always bragged, I'm a centrist. He was the Bill Clinton. We're the centrist. We're for law and order. We're for the economy. We're for, the union, whatever. And then he went wacko left. There's no reason for that unless, everybody's suppositions are correct about who's really running this thing. So what's he going to do as president for the year? So there's some real tough sledding going to come up here very shortly. Fed might, they're going to do their taper talk. We'll see what it is, how bold it is. The other thing that might be going on here is, I don't know if you saw the report here today that a week or so ago you saw that the two Fed presidents were trading stocks. Anyway, so we're even trading S&Ps. Kaplan from Dallas and Rosengren there from Boston, which is ridiculous. Of course, we know Nancy Pelosi's husband's made tens of millions of dollars trading options. So, but they exempt themselves. So now the Fed's got this problem. Well, it comes out today that Powell owned municipal bonds that the Fed was buying, similar types of bonds that, when the COVID panic, when they were buying stuff. So now you have to say to yourself, Powell's done everything he can for a year. He's done everything but go over there and wash Joe Biden's back and give him a rub down to get renominated. He went all the social justice warrior, all the virtue signaling, the climate, you name it, he's done it so he could get renominated. This might throw the Powell out. Now, I don't think that was a factor in the market today. As you see, they went straight down all day. You had noon you had a little bit of a rally in there, and that was it. And today was expiration. And on futures and options, a huge expiration. And I don't know if this was part of the calculus here that how can you reappoint this guy now when everybody knows, and it's been leaked out, that the Obama people want Lael Collins. She's a big Obama buddy. She donated money to him. She's far left, and Powell did everything he can sucking up to the left to get renominated. But if he blows himself up now, and the Obama people tell Joe, no, Joe, it's going to be, Lael Brainerd here is going to be your new Fed chairman. Plus, she's a woman, and that you got the midterms coming up here. It'll be interesting to see how that plays with the markets, but also how that plays internationally. So there's a lot of rubber starting to hit the road here. And once you're here trying to do the debt ceiling, you're doing this stuff, and they're going to do all this, going to jerk around for the next couple of weeks with that, and whatever you're going to do with the spending bills and how that ends up. And then all of a sudden you're into the holidays and you have recess. And you know what happens then? You come back, you're in the election cycle. These guys are out raising money and campaigning. And this is going to be one of the most bitter, hard-fought midterms because a lot of people are going to be in real big trouble if the Republicans take the House and you go after January 6th, you start releasing the 14,000 hours of video. You start making the FBI come in and talk about who they were partnering with to foment trouble, to get people to storm the Capitol. What were they doing with Whitmer? I mean, the guy that was the lead FBI guy already got tossed. And what was Hunter Biden doing? What'd you guys do with that, with his, PC, on and on and on? And the difference now is, in the past you say, well, the Republicans are going to go along, get along. The people coming in are firebrands. And you got Jimmy Jordan, you got these other guys in here. And they understand you better go hard at this. And the Republicans want that. That's the reason they voted for Trump, is they wanted somebody to go after these guys. They don't want George Bush or any of those Bush-like kind of people in there. The Lindsey Grahams, the Romneys, the Murkowskis, the Collins. And that's the Republican Party in the past, but it's changing. And that's what's going to be interesting here. So, it's going to, I think that just the way you look ahead there, it's going to be real, real tough. That's why they're fighting so hard to jam through this $3.5 trillion, the other bill, the infrastructure, the voting by mail bills, because they know this is going to be really tough. The odds are they're going to lose and lose big in the House and lose small in the Senate. All you have to do is lose one seat to lose it. And then what do? You pounded on Trump for 4 years, and you got Biden in here who's got a lot more baggage and dirt than Trump, and including his family. What are you going to do here for the 2 years into the big election of 2024? I will bet if that happens, you could see Manchin switch to Republican. You might even see what's her name, Sienna, or whatever her name down in Arizona, another one who's been a moderate now and holding up against the $3.5 trillion goodie bill here. So this is going to be a real volatile year politically in here. And God help us if you start seeing terrorist attacks against U.S. interests, let alone if it's on U.S. soil after what, with the Afghanistan. So this is going to be a real challenging year coming up politically. And if it is politically, it tends to be for the economy too.
Well, so we've also got our debt issue, plus you mentioned Evergrande earlier, which is sort of tip of the iceberg in terms of, you don't want to know what's underneath the Chinese credit markets. And, there's real issues there too.
See, every time you have these problems on Wall Street, they throw numbers out, but they don't know until they get in there and start unpeeling this stuff. Until they got in there, they had no idea how levered Lehman was. And it's the same thing. They're saying, well, this is $300 billion worth of debt here for Evergrande. But we don't know. We don't know all the tentacles and where it goes and on and on and on. And, that's the problem. Everything is so levered. There's so many derivatives. There's so much off-book nonsense going on. Off-balance sheet positions carrying, repoing stuff so you don't show it at the end. I mean, that's what Lehman was doing. They kept offloading stuff at the end of the month so they didn't have to report it. I mean, that's what happens. And every time we get worse and worse crises because the elites and the establishment get bailed out and they don't learn any lessons. In fact, they go hard the other way going, my God, look at how much money we're making. And they bail us out. And as I said, it's the financial terrorism card. If you don't bail us out, we take down the system. If you don't let us trade commodities and options and speculate and lever us to the teeth, we'll take down the system. Somebody sometime is going to be an Andrew Jackson, a real Andrew Jackson, not a fake one like Trump, and come in there and go, you know what? We're going to do what's best for the real people. We're going to take a hit, but we're going to clean you guys out, and we're not going to ever be beholden to you guys again. And that's going to be out there someday. I don't know. I don't see anyone who was out there doing it. I think that's why they're afraid of DeSantis, because he acts like a leader, and he acts like he does his own thinking, and he's not beholden to people. And that's why they're already taking shots at him. They're scared to death of him.
Really,
and of course,
Jackson,
we're starting to see the first indictment here showed up from Durham. And it runs right on Hillary's lap. It's her lawyer, Sussman. And everybody, they try to downplay the indictment, but if you read what's in there, they've got tech companies talking about how we can make this thing look like Trump was communicating with the Russians, but we got to be careful we get caught because we're giving away our secrets. And they start naming reporters that we can go to and they'll spread these BS stories so we can get this going. It's all a conspiracy. And, of course, the media is staying away from it because they're involved. If the rumors are right that Durham's going to indict people that aren't politicians or in that political apparatus, that means these reporters. That means it could mean the guys at GPS or these other guys who were running around with the media conspiring. Then what happens? What does that do in Washington? What does that do in Congress? If anybody knows, that slows down because everybody's trying to figure out how to stay out of jail, and they're calling in all the favors, so for all your bills and whatever. So that's, to me, is that it's going to be interesting as we proceed for the next year. And you're in an election cycle here with all these, I don't even want to call them potholes or anything. These things are cataclysmic events sitting out here. Any one could be horrible, but I've never seen so many on the horizon or in the landscape as you do right now. So the best thing here is to be careful.
Be careful. Yeah, I mean, it's interesting that the news media won't pick up on a lot of things. So, much of what you've described, potholes, you could drive a VW Bug into them, and yet, with a very minute attention span by the general public and a news cycle which says, what are you talking about? I don't see what you're talking about. Nothing happened here. Move along.
Yep.
How does that define 2020 politics unless there's sort of an underlying frustration that gets expressed? And this comes back to what you were saying in terms of the economics are what people are feeling. And if there's a point of frustration, it doesn't matter what's in the news cycle. It matters what people are experiencing.
Yeah, it's the country's mad. You see it in the polling, and they're upset. And, I call this the stock market's part of the bread and circuses that they're giving you for entertainment. There's never been more people speculating, and you see it in these enormous option volumes. There's never been this much speculation. And it's beyond some of it's pastime, some of it's they're realizing the video game generation, the last 20, 30 years, the guys playing video games said, hey, you know what, this is a video game. I get on my phone and I'm playing a video game, but I can make money doing this. This is even better than the video poker craze that went around 15, 20 years ago. These guys were so conditioned, their behavior, to do this, to sit there while you're at work or at a meeting and pick up your cell phone, see a headline, and then just start trading some options or trying one of these meme stocks. I mean, it's unbelievable. They have no idea what the fundamentals are or what's really going on.
Let's shift to currencies, because it seems like with underlying debt issues and a tremendous amount of speculation, as you say, indications of speculation showing up, whether it's the non-fungible tokens or your options trades or what have you, it seems like real problems are going to show themselves, maybe in subtle ways, maybe in not so subtle ways, if we're watching the RMB, if we're watching the euro, if we're watching the dollar. What are you watching for in the currency markets?
Well, unfortunately, right now it's hard to see anything because everything's so rigged. The ECB, what they're doing, the euro, Japan with the yen, all these central banks are pumping money. And so I hate to say there's relative stability. I would think maybe the one to watch is China because of the debt. That situation is just so bad. And if that starts tumbling, what do? Well, if it really starts falling apart, the yuan's going to go down. And it's going to go down a lot because they're going to have to start printing money even more than they have. And if that happens, then, what happens to Japan and Germany and Europe and United States? Put it this way. If you had the Asian contagion because the Asian currencies were starting to collapse, right? The blaming Soros and others there for collapsing those. And that was almost taking down. Those guys didn't have much debt, in all honesty. Those Asian tigers were flush with cash in current accounts. But China, what happens if you have that going there? My gosh, you can't. There's just no way to know where that goes and how far, because you don't know. The thing we don't know also is a foreign fixed investment. All these big companies here that have been kissing China's keister since the mid-'90s to get in there. We don't know what their exposure is. They don't know, I'm sure. And you just don't know what China's going to do. Is China going to say, we've got these rules of yours and how we take care of people? Or are they just going to say, no, we're going to write the rules as we go along? And that's what they're going to do. There's no, take me to court, sue me. Go ahead. Take me to, Manhattan Superior Court try to sue me for your assets. Go ahead. So there's no telling. So if you want to watch the currencies right now, it's China, because China's the one that could really, really, they're the elephant there that could really upset the apple cart really big here.
We're watching Evergrande. We're watching a couple of other companies. Looks like the wealth management, the asset management companies, escaped by the skin of their teeth with government stepping in and helping them out. What's to keep the Chinese from continuing, as we've just thrown money at things? We went through, your litany of 1982, 1984, 1987, 1989, 1991, 92. Why don't we do the same thing in China? We've got a bubble. It's pretty phenomenal what they've done with real estate development. Probably in the first inning of real trouble there, but throw money at it. It seems to work every time.
They've been trying to do that, but if you notice, they really were actually going the other way. They've started for the last few months arresting and pounding on their billionaires, right? You've watched that whole thing. It's cracking down. Remember, we saw all these. We're cracking down on GameStocks. We're cracking down on these guys. We're cracking down on Jack Ma. We're cracking down on Tencent. They're doing a slow rolling crackdown. And the reason they're doing that, and they started pulling the money out of these guys before, and remember they try to get their money out of some of the real estate because they saw it coming. And it's just like the COVID. They do all their stuff before and everybody else knows what's going on. And there's a reason that there was an article out, and I think I had in a letter there, but having worked with two of the biggest Japanese firms, actually the first biggest and third biggest in the 80s, they will go along and they can do all this nonsense until food inflation shows up, because food inflation causes riots and political turmoil. And then the reason Japan and China, Korea and Indonesia and these other Asian countries have to be mercantilist and export-driven because their populations are so huge they can't pay for it, and they don't have enough raw materials. They have to import food products and raw materials. And when the food inflation goes, then you get riots and political turmoil. That's the problem. So you can print the money. That's fine when you have low inflation and soybean prices are low and pork prices are low, and everything's okay, and you have nice supply chains, so you can import. The U.S. meat packers can send you a lot of chicken and pork if you guys don't have it. But when that's the problem, those populations are India. I'm sorry, that's the other one in there. Asian populations are so great. Their number one problem is food and feeding their population. If you don't, then you have riots and turmoil and whatever. So that's what Japan would always weaken the yen until the food inflation showed up. Then they would strengthen it, because by strengthening the yen, they lowered the cost of the food imports. To get to your point, they've gone through that calculation. They're dealing with the inflation. They know it. So that's the thing that kind of checkmates them is food inflation.
Yeah, they can't throw a ton of money at it.
And for Japan, it's oil, because they have to import 98% of their oil or something like that. So that's when Japan will let the yen appreciate, is when inflation, food and energy inflation, gets to the point where it can cause political turmoil.
What seems to me sort of in their hip pocket is the ability to distract, and even when people are feeling the pain and perhaps want to hit the streets with some expression of anger or angst, Taiwan's just across that little stretch of water and represents a great way to distract the masses.
Right, and you had North Korea all of a sudden shooting missiles and enriching uranium, whatever. And they used to do that when Bill Clinton, where every time they couldn't feed their population, they'd shoot some missiles, rattle saber, and then we'd send them some grains and food products and whatever. Absolutely.
I mean, what if this is in the next 2 years that we've got issues with China scapegoating, and it's really easy just to figure out that the Taiwanese nationals are the ones who've caused this problem or that problem, or however it gets played. Who knows how it gets advertised or PR'd to death. But what do we do? What is the great leaders in Washington, D.C., how do we respond? It seems like the next 2 years is a little dicey.
The people running Biden write a speech for him, and he goes and reads it off of a teleprompter, and he takes no questions and walks away. That's what he does. What do they do about Afghanistan? What are they doing about the COVID? What about, whatever. What's he doing about his bills? The infrastructure, the different plans. They come out, they give you they give you the happy talk or whatever. They tell you their talking points and they walk away. Who's in charge? Even Trump didn't say, never say. Nobody else was in charge of the White House. It's probably Susan Rice. That's Tony Blinken was her assistant. This other guy's Jake Sullivan, who's involved with this Alpha Bank hoax. He's in there. It's none of these are Biden's people. These are either Clinton or Obama's people that he surrounded himself with. And you have to say, why? The guy's been in here. It's not like he's a new guy. It wasn't like he's Trump came in. He had nobody or whatever. He brings in Goldman Sachs people and people that despised him and hated him. He surrounded himself with, and all he did was leak to the media and undermine him. Biden's been in Washington, D.C. for over almost 50 years, right? 40-some years. He doesn't have people around him. Of course, he said the smartest guy he knows is his son Hunter, so maybe he doesn't. But that's telling. The guy's been a swamp monster, not a creature, for going on 5 decades. And he's got all these people around him are not his people. They're Obama's people and they're Clinton's people. So he said, what are you going to do? Who knows? Who knows? And that's the other thing, everybody's thinking about how long are they going to keep Joe in there. You hear the rumors, you see the rumors, but the reason they haven't pulled the plug on him so far is probably because Kamala Harris is there. She's more unlikable than Joe. That's what I'm saying here, was you're going forward. Forever what you want to think about the economy or the financial, that's fine. But when you look out there politically, and they did this to themselves, in the zest to get Trump, they destroyed the Constitution. They said, no matter what we do, whether it's Milley, undermining the president, whatever you do to get Trump, whether it's unlawful, immoral, unethical, or unconstitutional, you could do it if it's to get Trump. That's what's out there. And it's in the media, it's everywhere. And they put that out there for 4 years. So how do you rein that back in now? What's the rule of law? How does this all play? There's some really big questions here, but that's why you got to keep running the stock market so people don't pay attention. Again, once the bread and circuses end, then you got a problem. So I think it's going to be a real tricky year. Everybody knows it's going to be a tough year. It's going to be tricky because, as you said, in the past all you do is throw money at it. But you're at the point now where when the inflation shows up, that's the end game. Because all you do is right now, the sentiment is gone, and then when you read it, it's because of inflation. The average guy's getting killed in inflation. Everybody knows CPI is bogus. Nobody pays attention to CPI anymore except Wall Street because they want to trade it, and they want to fool you, or the politicians. When you've got people in the business telling you that rents are up 10 to 14% year over year, and the BLS says, no, you guys don't know what you're talking about. It's 2.9. We called 50,000 people. And the guy goes, well, our database is 13 million properties. No. Yeah, but these 50,000 people we called up, they know what the rent inflation is. That's what you're dealing with. How absurd is that?
So if it's dependent on bread and circuses continuing, not only is 2022 consequential from a political perspective, but keeping the stock market moving in the quote-unquote right direction is also pretty critical. So is there anything that you see in terms of divergences or breadth or, just things that you would say, it's not working?
Well, but what happens is, if you've noticed over the last few years, you get really bad divergences in breadth. And in the past, you see, it was the FANG stocks, right? The big Uber techs, the stocks the public wants to trade, or they're in the sexy stocks. And then all of a sudden, those would correct, they would go down, and then something happens, and money gets thrown in, and then all of a sudden we go up again, and the breadth improves. And that's what, breadth was horrible for most summer, and then it's improved recently in here. But as you said, what's tricky about it is that happens a lot of times late cycle, when the institutions go, I can't buy this crap that's overvalued, I'm going to buy the laggards. I'm going to buy some of this other stuff here. And all of a sudden that improves the breadth. So that's a little bit tricky in here, but yeah, everything's overvalued just because of all the easy money. There's nowhere to hide. What you got to do is you got to try to figure out where's the safest place to hide out. That's all you're doing here. You got to be safe. And to me, it's some combination of liquidity, some kind of cash and cash equivalents, and a hedge against that. Whether it's gold or silver or whatever, or whatever, some kind of hard asset against your cash equivalents. And you got to hang out, wait, and watch.
Yeah, we're back to the asset management side of our business. We're back to raising cash again. We've done that multiple weeks in a row. And it's risks are elevated. Reward, it's if you're willing to play the game, it sure feels like picking up pennies in front of a steamroller, though.
You said the key word about game. It is. It's whether this is fantasy football or whatever. It's a fantasy out here. This is a difficult environment here because you go back and you talk to professional traders, and they go, "This is absolutely absurd. It's ridiculous." But everything, all my experience, all my charts, my models, ultimately, I got to be long because I think Keynes said this, 80, 90 years ago. If you want to be in the stocks, don't think about what you like. It's a beauty contest. Don't pick who you think is the most beautiful. Look at the other judges and think who they think is most beautiful. And that's what you're doing here. And that's what the smart guys do. They hate it. They hate what's going on here, but they got to play it. They get marked by performance. So they're out there going, oh, this is really not good news. It's bad for the economy. But you know what? I think all these retail guys are going to be buying stuff, so I buy too. That's what's going on. That's what this is. Because you learn, no matter how stupid it is, if you're a trader or you're a professional investor, you got to go with the trend. By definition, you have to be with the trend or you get killed and you lose your job and you lose your money. The trend is your friend. That is the most absolute truism in investing and trading. And it doesn't matter how, like you said, it doesn't matter how irrational it is and you don't know how long it lasts. But when it gets in these irrational parts, you got to have some Warren Buffett in you where you say, I don't care. I'm not playing it. I don't need to play it. I don't care how far it goes or what's going. I sleep at night, and I'm not going to get caught when the inevitable bus comes, because it will come.
Cash equivalents and a hedge on it.
Yeah. And just hang out, wait and see where this goes, because this is going to be tricky.
Why are you still hanging out in Chicago?
Because my grandkids and kids are here. That's why. Otherwise, I'd be gone. I was babysitting with the one grandkid, the other two were just over a little while ago, coming home from school. They're in the next town over. That's why.
That makes sense. But you might be careful. Biden his next military deployment might be to the larger Chicagoland area.
Yeah, I'm outside.
It's getting worse than Iraq.
Southwest suburbs, away from that. But there's no reason to be in the cities. My daughter-in-law worked in the city, and she finally got a job out in the suburban area. People don't want this. When they're young, they want to be down there. Of course, they're leaving now too. But as soon as they get into the 30s, they get married, they get kids, and they're out. Yeah. So the big thing here is don't get caught up in the hoopla. Be safe. Be smart, just pay attention, and just realize there are an enormous number of moving parts out there. And I can see it with my letter. Usually it take me like 2 pages, 3 pages to get all this stuff going on in a day or two. Now, I struggle to get it all in 6 pages. And on the weekends, I struggle to get it into 8 pages. And when I started, it was like a 1-page letter. It was 20-some years ago, 30 years ago, I'm sorry, 30-some years ago. But that's how many, there's just so many things going on here, and you got to keep track of them because any one of them just goes bam. But yeah, just got to stay alert. Don't buy the garbage, the headlines, and do some research. The one thing is much easier now because of the internet and the search engines. You can go in there and look and search and do some research here and see what's really going on.
Well, I appreciate you sharing what's on your mind. The analysis is complex. There is a lot going on. I do really appreciate the 3 points that you put in every letter. I mean, beginning to end, it's valuable. But usually as it relates to the market, you've got a positive note, a negative note, an ambiguous note, something in the market which it's difficult to say where this one's going. If you said, not as it applies to the market as it traded today, but if you said 2021, 2022, what's your positive note? What's your negative note? What's your ambiguous note?
Well, for 22 and 22, it hasn't collapsed. This is the most positive thing. This thing hasn't collapsed yet. And there's enough stuff here that could make it all come down real hard. So that's what's positive, is you lived another day. That's what this is. The negatives, there's just too many to list. We talked about all of them. It's just over the transom. And in a way, that's the positive, is with all these negatives, it hasn't gone down. But we all know why it hasn't. It's because they're just throwing so much money at it. I mean, look at the trillions. And it's not just what the Fed's pumping. Look at what was spent in the last 18 months from the federal government. It's ridiculous. Bail out airlines, bail out all these people, and they still fire people. Giving money to Kennedy Center Performing Arts or whatever these people were giving money to. All the different pet organizations or projects. It's ridiculous. No wonder teachers didn't want to go in and work there, but you're getting paid to stay home. It was unbelievable. And we saw this where people were making more money because they had the enhanced benefits than their jobs. It was unbelievable. I know journalists for many years got let go, and he couldn't believe how much he was making. Just violent. It was ridiculous. Absolutely ridiculous sitting at home making that kind of money.
So the positive and negative, what do you throw in the ambiguous category?
Well, the ambiguous is really the political leadership here. That's what's ambiguous, is who's going to take control. Is it going to be good or bad? I mean, that's what you don't know here. It used to be, the market liked divided government. That's garbage. That's just nonsense talk. And you're throwing all this money in the Democrats threw in here. It worked for a while. But the problem is what happens next. So, if you think of what's ambiguous in here, it is the role of the Fed and the government, all this fiscal and monetary policy. Is it ending? That's what we don't know. Are they really going to end it? Are they really going to slow it down? Powell tried to do this in the fourth quarter of 2018, right in front of the election, that really ended up blowing up the Republicans, lost control of Congress. So much for the Fed. There used to be a rule. You don't do any changes in monetary policy 6 months in front of an election. He did it right into it. He did it in the election. The market fell 20. I mean, if you go look at historically what happens to politicians when the market goes down big, the incumbents lose. And he did it. But now they want to do anything. So they know they've got a problem because the 2022 is coming up here. That's why he's better start talking paper and start doing it now. The Democrats will go out of their minds if he starts trying to do this in the summer. And by then, if inflation is out of control, they're going to be mad at him anyway. And he's going to take the hit anyway. So I think the best thing right now would be is if Powell figured out that Biden's not likely to renominate him, he does what's right, not what's politically correct.
And that has a market consequence. To tighten the credit markets at all, you got a lot of people buying call options. Maybe they should consider the other side of the trade.
Well, that will get interesting. If you ever send these people going the other way, what's the pressure that's going to put on the downside?
Can you imagine those kinds of volumes?
That's what I'm saying. It's one thing you think about, the elephants grazing the grass and that. Well, you know what's worse? Locusts. I mean, that's why Lenin said we're going to unleash the locusts of revolution. He didn't say the T-Rexes or the elephants. It's the locusts, because that's the hardest thing to control. And that's what they're finding out now in the market. They unleashed all these locusts on the option market and the meme stocks, whatever. And you know what? It always looks great when it's going up, but it goes the other way. And when it goes the other way, oh my God, good luck trying to sell something if you've got all these people with cell phones trying to unload at the same time. They don't even have to call their broker. Just, I'm shooting orders to the market. See, that was the circuit breaker before. Is orders got congregated. There was only a few avenues to get them in the New York Stock Exchange or in the over-the-counter market. Now, you don't have to call your broker. Before how many phone calls could a broker handle? If he's got 200 customers, they're calling in to sell, how many can he talk to at a time? Even if he has an assistant. And that was part of the market breakers in there. Now, you don't need that. You just zip the order right down there. That's why these moves get so explosive at times. And again, wait till this stuff goes on the downside. It's going to be unbelievable. That's
what Leon Cooperman was talking about to some degree the other day. Don't be surprised when it breaks, it's going to break hard.
Oh, you can't even fathom. How this, 87, I always tell people, it was down 508. Everybody goes, it was down 508. And I said, no. The real number was down 750 to 800 because that's where the futures and the options were trading. But they couldn't put the stocks in line where the futures were trading. But that was the real number. Now, if you would have been showing it's down 750 instead of 800, it would have been unfathomable. I mean, that's why they were so scared the next day, because where the futures and options were trading, it was much worse. In addition, and I was running trading desk in New York at the time, major brokerage. You couldn't get brokers to pick up your phone. You couldn't get the $2 guys on the floor. You couldn't get over-the-counter guys to pick up. You heard customers were complaining, we called for that. They couldn't pick up because the old communication system was the circuit breaker. And that's my point now. Now, just hit the button to sell. You don't need to pick up your broker. You don't need to get a broker. And then your broker calls the trading desk. And then the trading desk calls the trader on the floor. Those 3 or 4 lines of communications, they all shut down in 87. Otherwise, I can't even fathom how much the market would have been down. You just couldn't do transactions. Now, zip it right to the floor. No telling what's going to happen. It's not actually a floor. You just zip it right to the computers. That's what's lurking out there.
About every 3 or 4 months, there's a tension in the market where it goes unresolved and you can tell that something's building. And usually somewhere in your letter, your caution antenna is way high. And you'll say something like, just be careful. If you don't have to play, don't. And it sounds like the antenna is somewhat up.
Oh, it's up huge here. What gets you through crisis is when you look and you have leadership. If you have a Paul Volcker at the Fed or you can say a Reagan in the White House or whatever, something that's going to get you through this. And even if you don't have those guys, if you look into the first Gulf War, for 15, 20 years, America, the media just slandered the U.S. military. But in that Gulf War, and of course they had new tools, they put those General Schwarzkopf and some of these other guys out in that were whatever. And people were stunned. Then they saw these guys had degrees from Princeton, advanced degrees. West Point, they had advanced degrees, masters or doctorates in War College, and they were explaining stuff, and they were going, oh my gosh. And then you found out these guys were lieutenants and captains in Vietnam, and they were vowed they're never going to allow that to happen again. There was incredible leadership. It's gone. Obama threw out all the hard-nosed guys, brought in 200. So that's why you got what you're going on here. Anybody who wasn't loyal, you don't get promoted. You're gone. Threw them out. And Trump never moved to fix that. Now you can complain. He hired Milley. He brought in Mattis. He brought in McMasters. He brought in, oh my gosh, I picture a guy was from Boston. Was his chief of staff, Kelly, that undermined him. They're all Democrats. There was a reason he was unsuccessful is he didn't know what he was doing as far as bringing in the people. One guy can't do it. It's all the people around him. And that's what I'm talking with the leadership. You see what's going on here. You saw what went on in Afghanistan. And that's not just on Biden, on that. Look at the people. That they didn't know what they were doing. Well, there was the Department of Defense, the top generals, the State Department, HHS. What's going on here? You just don't have this. You don't have the people, serious people that came through, whether it was World War II or Korea War or the Vietnam War or whatever. You got the people in here now oh my gosh. And that's what I'm talking about, the leadership. When it starts falling apart, where are you going to fall? Who's going to stand up? Who's going to be the leaders? Who's going to pull this thing together? And I don't see them at the Fed right now. I don't see Yellen being that anybody's going to inspire confidence at Treasury. You can go right through the whole list. So that's going to be the challenge. What's your leadership? You going to run Joe Biden out to read a teleprompter? Kamala Harris? Good luck.
Good luck. Good luck. Well, again, appreciate you sharing what's on your mind. Thanks, Bill.
Take care. Thank you.
You've been listening to the McAlvany Weekly Commentary. I'm Kevin Orrick along with David McAlvany and our guest today, Bill King. You can find us at McAlvany.com, McAlvany.com, and you can call us at 800-525-9556.
This has been the McAlvany Weekly Commentary. The views expressed should not be considered to be a solicitation or a recommendation for your investment portfolio. You should consult a professional financial advisor to assess your suitability for risk and investment. Join us again next week for a new edition of the McAlvany Weekly Commentary.